You can actually predict the price of Bitcoin very roughly, I should say, but you can do it. And because we know the stock to flow ratio of Bitcoin, it's pre-programmed, and that's a very nice thing. And it's of course very bullish at the moment. It predicts somewhere around $100,000 Bitcoin.
Bitcoin maximalist Plan B talks about his prediction for Bitcoin, as well as the price he sees coming to the halving by 2024. His stock-to-flow model is on target for the $100,000 price point for Bitcoin, and many investors are waiting for signals in the market to take part in the next bull run. Almost half the people surveyed by Plan B recently on Twitter believe that by December of this year, in 2022, Bitcoin's price will remain between $20,000 and $30,000. Plan B predicts the next halving will have a larger impact, as the last bull market was derailed by economic and international conflict. Let's check out this interview with Plan B as he discusses what we can expect in the crypto market for Bitcoin. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Of course, from efficient market hypothesis, you would expect that this knowledge and the model would be priced in. So I actually, and most people with me, expected the halving, the May 2020 halving would be priced in already. So we would not see the actual price rise that we're seeing now. That is very much in line with the stock to flow model, because all the information is out there, the stock information, the flow, the stock to flow ratio, and the model. So it shouldn't follow the model as closely as it does today. On the other hand, there's a lot of people not believing the model, and the model, of course, hasn't proven itself. So maybe that sort of puts the efficient market hypothesis argument aside. But on the other hand, I think that the stock to flow model will break in the future, because one of the nice things about the stock to flow model, and especially the stock to flow cross asset model, the stock to flow X model, which also incorporates data from the gold market, diamond market, real estate market, and silver market. So other stores of value, if you will. If we look at that stock to flow X model, we can interpolate the data because gold has a higher stock to flow ratio than Bitcoin, and real estate has a higher stock to flow ratio. Gold is around 60, and real estate is around 100, where Bitcoin is 50, 55 right now. So we know we can, within the data set we have available with gold and real estate in there, with market values of 10 trillion for the gold market and 100 trillion for the real estate market, we can interpolate within the data set, and of course that ends, because if Bitcoin will have its next halving in 2024, the Bitcoin stock to flow ratio will jump to 100, which is which is approximately the same as real estate. But after next halving, where we jump to 200 stock to flow ratio for Bitcoin, we're out of the model data bounds, if you will, and then we have to extrapolate.
Plan B says because you can exchange Bitcoin with other currencies, you can make very hard arbitrages with enormous sums of money. Some traditional parties are doing that, and with the central bank, as long as they position themselves in a corner where they can't get out, they can't raise the interest rates, which will eliminate the stock market bond, market real estate, and the economy, and nobody wants to do that. So they're printing more and more while saying they're tapering, which is causing even more inflation than people can imagine.
One of the big assets, big advantages of the stock to flow model, the stock to flow X model in particular, is that this interpolation can be done. So to be in short, I think the stock to flow model will end to be valid somewhere after next halving, when the stock to flow is above 100, because we cannot interpolate anymore. And of course that means probably that the dollar, the denominator in that model, will end to play a big role, or something. Of course, it doesn't say that Bitcoin will die or something. It's you know, it's just a model. Will not be very accurate after that. What most people maybe don't know is my background is in institutional investment, and I've been in institutional investor roles my entire life. So I started at a dealing room in FX trading, then went to banking balance sheets and insurance balance sheets. And lately, my latest job was managing a pension balance sheet with the team. And that balance sheet was 100 billion US dollars approximately. So I spent my life chasing those charts that you have in front there and chasing those sell walls and buy walls. And what I noticed was that most people are sort of scared by those big walls, those big sell walls in this case, in that chart. And of course, most of the time, not all the time, but most of the time, these sell walls are just there to scare people in not buying or even selling, and because they signal, don't come here where there's at the price level where the sell wall is, because we will sell and we will keep the price under this level. But in fact, what you see in real life, 9 in 10 times, you see that as the price approaches the sell wall gets cancelled and moved further away. So in this case, the sell wall will be moved at a higher price. So it's just scare tactics, and the big moves in Bitcoin were all sort of triggered by regulatory changes, regulatory clarity. So I track all the important news and I put it in a database as well. However, I don't use it as an explicit input variable in my models. Both the stock to flow model, which only has one input, which is stock to flow ratio, but also the on-chain models or the floor models, more technical analysis based models. They don't use that kind of information. But in fact, those kinds of news events, it could be regulatory news, but it could also be other macroeconomic news, like El Salvador adopting Bitcoin or China banning Bitcoin, etc. This kind of news is very difficult to predict once it happens, and what the impact will be. Is it priced in? Do people expect it or not? So I regard those as trigger events that create an outlier in the model, or and that means that there is a spike above the model value or below the value of the model. But those spikes, those trigger events are very rare and are very like black swan events. So they cause some variation in the model, some model error, but they don't disturb the general trend in the models. That's what that's how I look at it. I'm more an investor than a trader, and certainly not a day trader. So I was lucky to buy Bitcoin in 2015 and 2016 when the price was 400, 500 kindish. Those are my Bitcoin investments, and I've told in other interviews as well that I sold half of that stash in shortly after the peak in December 2017, based on stock to flow kind of models. So and I reinvested that half that I sold just before I published the article about stock to flow, because I knew we were at a very low level compared to the stock to flow model at that time. So in that way, I sort of trade or sort of try to time the peaks and the bottoms, but that's on a monthly or even yearly basis, and I certainly do not trade on an hourly basis. That being said, I am very intrigued, as you know, by on-chain analysis. I do a lot of on-chain analysis, and I have a great team of quants around me that can do all sorts of programming, the blockchain data, and getting signals from there, and that's very, very interesting. And sometimes you can actually find patterns that are tradable on a daily or weekly or monthly basis, so on a shorter interval that I'm used to invest.
What do you think about Plan B's prediction for Bitcoin, as well as the stock and crypto markets leading into 2023? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.